Welcome in to another episode of Coffee with CRS. I'm Jody, which I'm sure you know by now, and I'm here with Paul Anderson, one of our small business experts and partners here at CRS. Today, we're talking about a brand new feature of the Big Beautiful Bill, deductions for tips and overtime. What's this all about, Paul?
This is a really big change, Jody. For the first time, certain workers can deduct their qualified tips and overtime pay right off the top of their income. An above the line deduction. It's like your paycheck is wearing a disguise. Nothing to see here, IRS. This applies to from 2025 through 2028 and is aimed at helping people in service industries like restaurants, hospitality, and retail.
As a former waitress, I can tell you this is a great thing. Who qualifies for this deduction?
Most hourly workers who earn tips or overtime can qualify as long as they're not highly compensated or in certain professional service fields. For example, a restaurant server who makes $8,000 in tips, $3,000 in overtime could deduct that $11,000 from their taxable income, lowering their tax bill significantly.
But how does the overtime part work? Can I just deduct all of my overtime pay and buy a new boat?
Not quite, Captain Jody. The key is to understand that you can't deduct your entire overtime pay, just the premium part. Under federal law, when you work more than 40 hours a week, you're entitled to time and a half. Mm-hmm. That means for every overtime hour, you get your regular hourly rate plus another 50%. Mm-hmm. The deduction only applies to that extra 50% of the overtime premium, not your entire overtime pay.
That's still great. 50%, I'll take it. Can you give us a concrete example?
Sure. Let's say you earn $20 an hour, work 50 hours a week. The first 40 hours, you get your regular pay. 40 hours times 20 is $800. Mm-hmm. For the 10 overtime hours, you get paid $30 an hour. Your regular $20 plus the 10 overtime premium. Mm-hmm. So for these 10 hours, you earn $300 in overtime pay. But only the $10 per hour premium. Mm-hmm. So $100 of those total 10 hours is deductible. The base $20 per hour that your regular pay isn't deductible, just the extra part.
Hey, anything that we can deduct is great. So if I work a ton of overtime, could I have a pretty nice deduction?
Yes. If you add up all your overtime premiums for the year, let's say it totals $5,000, you can deduct $5,000 from your taxable income as long as you're under the annual cap, which is $12,500 for single filers, $25,000 for joint filers. There's also a phase out for higher incomes, which starts at $150,000 for singles, $300,000 for joint filers.
That sounds wonderful. Are there any other rules people should know about?
There are a few. First, the deduction only applies to overtime that's required by federal law. So time and a half for hours over 40 a week. Mm-hmm. Some states have different overtime rules, but only the federal part counts. Also, your employer will report your qualified overtime premium on your W-2, so you'll have to have that info you need at tax time. And you have to have a valid Social Security number on your return to claim the deduction.
How does this help small businesses?
It's a win for small businesses because they have happier employees, better retention, more money in the local economy. It's win-win unless you're allergic to happiness.
Well, I'm definitely not allergic to happiness, and all of this sounds great. Next time, we'll dive into the qualified business income deduction and see what's changed for small business owners. Thanks, Paul.
Thank
you.
And
if I ever buy that boat, you're more than welcome to go out with me.
Sweet.